Share capital of a company. A company acquires capital by selling shares to the public. So when a company is registered as a public company, they are registered with something that we call authorized share capital. That is the amount of capital or the amount of shares that a company has available to convert into capital later on. Now, the second shares that we deal with in a company is called issued shares, and that's actually more important than the authorized shares, because the issued shares are the shares that are actually sold to the public. So, secondly, the price at which these shares are to be sold must be determined. There are different kinds of shares. We will concentrate on ordinary shares with no par value. This means that there's no fixed price at which these shares are sold. So the JSE, the Johannesburg Stock Exchange, is the market where shares can be bought and sold to the public. Now, prices of shares fluctuate frequently and are determined by the market conditions at any given time. So prices are therefore more or less than the original issued price. The price at which a share is traded on the JSE is known as the market price of the shares at any given time. So to summarize the following, there's two types of shares that is important for you to know. You get authorized and you get issued capital shares. So the authorized share capital is the total number of shares a company is authorized to issue, but it does not have a money value yet. So in other words, let's take an example. We have 100,000 ordinary shares. So these authorized shares can then be converted into issued share capital. So issued share capital represents the number of shares which have already been issued or sold to the public, multiplied by the issued price per share. For example, the 100,000 ordinary shares we had, 20,000 of those shares were issued at a price R12.25 each. That gives you a total value of 245,000 Rand that we basically got for issuing the shares. So that 245,000 is now called share capital, or in our books it's going to be called ordinary share capital. Thereafter, we also issue a further 30,000 ordinary shares. So let's just quickly recap. We had 100,000 available authorized. Of that 100,000, we first issued 20,000, and then we issued a further 30,000 at a price of R18.50. That gives you a total for the second issuing of 555,000 Rand. So in total, the issued share price of the 20 plus the 30, in other words, of the 50,000 shares that we issued so far, we got a value of 800,000. That's the 245,000 plus the 555 now gives us a total value of 800,000. As I said earlier, that 800,000 is now called the ordinary share capital. So if we wanted to work out the average share price, we would take the 800,000 divided by the 50,000 shares, and that gives you a share price on average of 16 Rand per share. Let's do an example. Now the example are very simple. The example says issuing of ordinary shares at different prices and calculate the average issue price. So on the 31st of January 2015, the company has an authorized share capital of 500,000 ordinary shares. Remember, those 500,000 shares does not have a value yet. It has no money value yet because we haven't issued it yet. It only starts to get a value once we issue it. So on that same day, 31st of January, on this day, 100,000 shares are issued at an issue price of R2 per share. So on the 31st of May, a further 200,000 ordinary shares are issued at an issue price of R2.60 per share. On the 30th of October, all the remaining shares are issued at a price of R3.40. Now the price are different because every time the markets will be different, and because the markets fluctuate, so does our different issue prices. So the question asks you, in which subsidiary journal will we record this issuing of shares? Now, issuing of shares means that we are selling shares to the public. So in other words, the public will give us money back for that. So that means that we will record the price that we get in the CRJ. It's money that we received. Which source documents will we use? The source document is a share certificate, which is then given to the new shareholders as proof that they've bought our shares. Second question. What is the average share price after the 31st of May? So remember, to work out average share price, you need to have the share capital amount as well as the number of shares. So let's go and look on the 31st of May, what is our share capital amount? In other words, we issued 100,000 shares at R2. That gives us 200,000 Rand. A further 200,000 shares were issued at R2.60. So that leaves us with 100,000 at R2, 200,000. 200,000 at R2.60 leaves us with 520,000. So in total, our share capital amount is then 720. How many shares do we have issued? Number of shares issued was the 100,000 as well as the 200,000. So that leaves us with 300,000 shares that we've issued thus far. So in other words, what is the average price then? If we take our 720 and we divide it by 300, that leaves us with an average price of R2.40. The third question. Average share price after the 30th of October 2015. So on 30th of October, we yet again gave out the remaining shares. What is the remaining shares? Let's see. We had 500,000 shares to issue. First issuing, we only issued 100,000. That leaves us with 400,000. Then we issued a further 200,000. That leaves you with 200,000. So the remaining shares is then in other words 200,000 shares which we've issued at R3.40. That is then a total of 680,000 that we got from issuing these shares. In other words, our share capital amount is 720 plus then the 680. The 720 comes from the first two issuings that we worked out in question number 2. Added to that is the third issuing of 680. That leaves you with a total capital of 1.4 million. How many shares have we issued? 300,000 plus 200. In other words, we issued all of our authorized share capital. All of the authorized share capital is the 500,000 shares, all of them gone to the public. That gives you an average share price of R2.80 per share. It is important that you understand how to calculate the average share price. It is a calculation that we will use often in the exercises to come, and it forms quite a big part of company's theory that you need to understand. Also important is that you need to understand how this is now recorded in our general ledger. Now the account that we will use is called the ordinary share capital account. Now the ordinary share capital account is known as a share equity account or an owner's equity account. And an owner's equity account therefore increases on the credit side and decreases on the debit side. Now we want to show that our owner's equity account increased, so obviously the account will be credited. The account will be debited then by bank, and bank will increase on the debit side. So let's go and see what the transaction would have been like January 31st. January 31st, we issued our first 100,000 shares at R2, so that gives us an amount that came into bank of 200,000 Rand, and we used our CRJ to record the transaction. On May the 31st, we also used bank again for the 520,000, which we've got from the second issuing. That leaves us with a total of 720,000 currently in the ordinary share capital account. So the third issuing, the last 200,000 shares. On October 30th, bank again, CRJ was used, gave us a further 680. So in total, the amount of capital that we gained or that we got from issuing all of our shares leaves you with 1.4 million Rand that we got. And that is then the capital that the company has thus far from the issuing of shares. So the first share equity account is the capital account, which is now standing on 1.4 million Rand. The next share equity account is called retained income. It is very important to remember that the directors of a company are not obliged to disperse all their profits to shareholders in the form of dividends. Profits can be withheld in order to finance the expansion of the company, which will naturally increase the value of the shares and the shareholders' equity as well. So the unappropriated profits or income, in other words, the unshared profits after tax and dividends, as calculated in the appropriation account. So we briefly explained the appropriation account in the previous video, and we will definitely explain it again in full later on, is posted to the retained income account. Now the retained income forms part of shareholders' equity and will always show a credit balance. Credit balance means that it has money in the account that is beneficial to the shareholders' equity. In the next video, we will then discuss the buying back or the repurchase of shares by a company.